CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
And so within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation of flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that is this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through what was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved, but it's an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. Live from New York, live from New Jersey, streaming on YouTube. It is a hot Monday, July 20th, 2020, at least in New York City, but on lots of the East Coast. And once again, when you take a look at the markets in terms of what's hot, Jason, it's the technology group.
It absolutely is, and that has been the story of this crisis in many ways, trying to find something happy and something that is green. Tech has seemed to deliver over and over again.
Yeah, it's going to be a big week, big couple of weeks when it comes to tech earnings, so we'll be all over it. We're also going to talk about the virus, some big news from the Oxford-AstraZeneca partnership. We talked about it in the cover story of the magazine. We'll get to the latest on that. So much to cover over the next 4 hours. And let's not forget.
Yeah, I mean, it's phase 4 here in and around New York City, or in New York City proper, I should say. That's a big deal, and this is something we've been waiting for a long time. No indoor dining, but so many things getting back to business, including TV and movie production. That's a big generator and a big economic piece of this market. So keep an eye on that. Fingers crossed, especially given everything that's going on in the rest of the country. Let's get to Charlie Pellet now to kick us off and help us understand what's going on with the numbers. Hey, Charlie.
Well, hello there. Happy Monday to you both. Start of a new trading week. Carol mentioned AstraZeneca. Let's begin there. Shares are trading lower right now. The ADRs, they are down by about 4%. Some of the other stocks in that space, Pfizer up 0.8%, and shares of BioNTech, they're up now by 1.3%. The Dow, the S&P, NASDAQ at or near the best level of the day. Technology shares leading markets higher, small caps lagging behind as investors await a flood of earnings reports later in the week. Here's where we stand right now. Speaking of earnings, by the way, IBM after the bell. S&P up 18, a gain of 0.6%. The Dow now up 30 points, up 0.1%. NASDAQ is up 183 points, up 1.8%. In the year-to-date column on the Bloomberg, NASDAQ up 19.1%. 10-year up 2/32, yield 0.61%. Gold up 0.3%, 18.15 the ounce. And West Texas Intermediate crude, $40.87 a barrel, up now by 0.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. It's going to be a big week. It's going to be a big week in the markets. It's going to be a big week for earnings. Let's understand where we are on this Monday by setting the Business Week agenda with Gina Martin Adams, Chief Equity Strategist for Bloomberg Intelligence, on the phone from New Jersey, along with Dave Wilson, Stocks Editor, author of the Chart and Stock of the Day. He also joins us from New Jersey. Gina, I want to start with you. Set the table. This is a big week.
It is. As a matter of fact, it's the second biggest week of earnings. The biggest week of earnings will be next week, but this is the second biggest week of earnings. We've got roughly 18% of the market cap of the S&P 500 set to report. Microsoft, Intel, and Verizon are some of the headliners this week. You know, I think that there's a lot of making up to do for somewhat disappointing financials reports. Financials generally beat second quarter earnings last week. 80% of the companies that have reported earnings so far have actually beat expectations, but that wasn't really enough for a market, especially sensitive to what's happening with the outlook as estimates move down for 2021. So what I think we need to see this week is some of these big tech names confirm the optimism embedded in prices and at least confirm that the outlook for 2021 is pretty strong for stocks to continue to move higher.
Right. We need, Gina, give me something, right?
Yeah, something other than a modest beat to a horrible second quarter expectation is definitely what the market needs.
I have to say, because I've had a bunch of conversations over the weekend with people in different industries, and there's a lot of pessimism out there, real concerns about what the economic backdrop is. Dave, come on in on our conversation. Talk to us a little bit about the trade today, because it really is tech-driven.
Absolutely. I mean, if you talk about, let's say, the fan mag stocks or the big six, however you want to refer to them, and we're talking Amazon, Apple, Google, their owner, Alphabet, Microsoft, Netflix, Facebook. It's probably out of order, but that's okay. I mean, that's it. That's the entire gain in those six stocks. In fact, it really comes down to, Amazon, Microsoft, Apple, and Alphabet, pretty much. I mean, it just goes to show you, there's been so much of a focus on these larger tech companies, and they really are carrying the day at this point, anticipation that their earnings are going to look better than what we're going to see from a whole lot of other companies, presumably as part of that. I mean, you look at, stock indexes and you see, the consumer discretionary group is leading the way, and that's the retailers, but it's all Amazon. That's sort of how it is. And right behind them are the tech stocks and, communication services, which is Facebook and Alphabet, and everything else out of the 11 main industry groups is lower. So it just goes to show you, how things are setting up at this point as we await the second quarter results.
Yeah, Gina, I don't know. You've seen so many market cycles. You have such great insight. I know one of the things that everybody's reading on the terminal today is about Ned Davis research kind of changing their tune when it comes to the market outlook and thinking more like changing, I think it was their bullish, really just abandoning their bullish call on U.S. equities. What do you look for? Who do you also like to follow that gives you a good idea of kind of where we go from here?
Yeah, I mean, I think you do look for the rate of change in economic momentum as one of the bigger drivers of potential optimism emerging for stocks going forward, and the fact that really the perception is that the economic momentum is going to stall over the next couple of months as we have had a renewed spike in infection rate. And that's one of the things that certainly is holding back a lot of confidence, a lot of sentiment toward the outlook. And we probably need to see that removed to get people coming back to equities en masse. But I do think the other side of the story is the Fed has reinflated tremendously. There's a pretty reasonable prospect that we're going to get another fiscal policy package out of Europe. We may get another fiscal policy package supporting the U.S. economy as well in the next couple of weeks. And that's most likely going to surprise these really sort of grim expectations to the upside, because it is liquidity, it is money that's going to help support the economies directly in some way, shape, or form. Maybe it's not the most efficient money, but it is money. And I think you do need to price that in. I mean, I take the point that FANG is driving a lot of gains. I mean, we look at the big five and call them FAMG, and you do see that those valuations relative to the rest of the S&P 500 are extremely high. However, this is not just a U.S. story. This is something we wrote about last week, too. If you look at BAT, the big tech stocks in China, the gap there in valuations is even bigger than the big tech gap here in the U.S. So this is a global phenomenon. This is a global tech concentration that I do think is somewhat at risk, but nonetheless, it keeps defying every skeptic's expectations that it can continue to go.
Yeah.
And just to clarify, BAT, we're talking about Baidu, Alibaba, and Tencent, correct?
Right.
That's correct.
There you go.
The
All right,
acronyms
team.
continue.
Exactly. Thank you so much, Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence from New Jersey, as was Dave Wilson, Stocks Editor for Bloomberg. He'll be back with us at 3:30 and just after the close. Carol?
Man, we have so much to cover over the next few hours, Jason. We're going to have the latest on the virus. There are a lot of headlines, whether it's vaccine-related or treatments. We have an interesting guest, Dr. Lisa Danzig. She is the Chief Medical Officer at CETF. It's COVID-19 Early Treatment Fund. Basically, it's a team that has been put together to work on repurposing drugs to treat the virus, and I think this is going to become a much more important story as we move forward.
Yeah, the therapeutics are something that maybe we've not thought as much or not talked as much about as we can. One thing we are talking a ton about, getting back to school, back to college in the fall. Bowdoin College President Clayton Rose is going to be along. Interested to hear the perspective from that very good school.
We've also got the Chairman, President, CEO, and Founder of Bloom Energy. That's some big news last week that moved the stock. We're going to get to them. IBM earnings after the bell, and someone who said it's time to start thinking for yourself.
There you go.
There's your tease.
You always have. All right. It's time for the Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number is $5. A Wisconsin bank bringing change to their community by helping local businesses struggling because of the nationwide shortage of coins caused by the pandemic. Community State Bank launched a coin buyback program which offers a $5 bonus for every $100 worth of coins turned into any of its 7 locations. Anyone who brings by coins, whether they're a bank customer or not, can receive a maximum coin bonus of $500. That's real money.
Just days after launching the program, hundreds of people have dropped off their spare change, already resulting in an incredible impact on local businesses that were struggling because of the shortage, according to the bank. I have to tell my daughter, man, she collects coins all the time and loves bringing them to the bank.
Right, and getting that money back. All right, let's head down to Washington. Nancy Lyons is there with World and National Headlines. Hey, Nancy.
Hey, Jason. Talks on a new coronavirus stimulus package are underway. Senate Majority Leader Mitch McConnell, Treasury Secretary Steven Mnuchin, and House Republican Leader Kevin McCarthy all met with President Trump today to discuss options. McConnell says they are looking at several possibilities.
The theme here, think liability protection for those who've been trying to deal with the pandemic. We don't need an epidemic of lawsuits on the heels of the pandemic we're already struggling with. Kids in school, jobs, and health care.
Democrats say shielding companies that reopen against lawsuits could grant legal immunity to negligent corporations or nursing homes. The House today has been paying tribute to the late Georgia Congressman John Lewis, who died Friday after a battle of several months against advanced pancreatic cancer. House Speaker Nancy Pelosi called for a moment of silence.
The chair asks that all those present in the chamber, as well as members and staff throughout the Capitol, and all who love John Lewis, wherever you are, rise in a moment of silence in remembrance of the conscience of the Congress, the Honorable John Lewis.
Lewis represented Georgia in the House since 1987. Investigators are looking into whether the apparent suicide of an attorney in Sullivan County, New York, has any connection with yesterday's shooting at a New Jersey judge's home. A gunman posing as a delivery person shot and killed the judge's 20-year-old son. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Well, one headline that certainly grabbed us this morning, Carol, was a deal. Chevron agreeing to buy Noble Energy for about $5 billion in stock. The oil giant looking to beef up amid the wreckage of the worst ever crude crash. It seems like 100 years ago, but that happened just a few months ago. CEO Mike Wirth of Chevron told Bloomberg's Alex Steele the entire Noble Energy portfolio is a, quote, nice fit for Chevron. Let's listen.
We like unconventionals. We've got unconventionals in Argentina, in Canada, and in the U.S., in Texas and New Mexico. This gives us exposure to another unconventional basin that's a high-quality resource. So the entire portfolio is a nice fit. It's not about one or the other.
So there you go. It's a great conversation. I heard a little bit more of it, Alex's conversation about that deal. And I think it's interesting. What's also, there's some great coverage on the terminal. Brooke Sutherland put out a piece, taking a look at it and maybe what it means more broadly. But what's interesting is you have to remember that Chevron lost out to Occidental in a much larger takeover for Anadarko. That was happening last year. And so obviously looking to do something, put some money to work, kind of cement their position. Whether or not this is going to set off a bunch of deals, that's not necessarily the case. But it's certainly interesting to see in this environment. And it's a reminder that companies are moving forward and trying to figure out what's the best strategy moves for their business. Sometimes it's an acquisition. Sometimes it's selling off assets. We've seen that with some of the consumer product names, right? Kind of whittling down their brand portfolios.
Yeah, absolutely. And investors, a little tepid on this deal, at least from a Chevron perspective, trading the stock down about 2% today. So we'll certainly keep an eye on it. But you love it when deals happen to some extent, Carol, because as you say, it sort of makes you wonder, all right, is there more to be done here? But do check out that whole conversation that Alex had with the CEO of Chevron. You can check that out on Bloomberg.com or, of course, the Bloomberg terminal.
Yeah, coming up, we're going to check in with Dr. Lisa Danzig. Very interesting with the CETF. You'll get a little bit more information about what they're doing in their fight to find some cures for the virus.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are holding near the highs of the day, with the Dow, the S&P, and NASDAQ all advancing back to work. Monday, we've got technology shares leading stocks higher, small caps lagging behind as investors await a flood of earnings reports later in the week. After the bell today, we will be hearing from IBM. S&P's up 19. That is a gain of 0.6%. The Dow had been negative for much of the session, up now by 16, up by 0.1%. NASDAQ up 199 points, up 1.9%. The NASDAQ 100 index is up by 2.1%. 10-year, the yield there, 0.61%, up 3/32. Gold up 0.3%, 18.15 the ounce. And West Texas Intermediate crude up 0.4%, 40.76 a barrel. Recapping, S&P up 19, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much for that update. Well, the CETF, it stands for COVID-19 Early Treatment Fund, founded by entrepreneur and philanthropist Steve Kirsch. This year, amid the pandemic, the fund recruits physicians, scientists, epidemiologists to work on repurposing drugs to treat the virus. So interesting, especially on a day when we got some more news about a vaccine specifically. Let's bring in Dr. Lisa Danzig. She's focused on infectious diseases. She spent over 18 years at Novartis Vaccines and Diagnostics. She's the chief medical advisor at CETF, and she's on the phone from San Francisco. Dr. Danzig, it is so great to have you here on Bloomberg Radio with Jason and myself. Tell us a little bit more about this fund. It's a new thing, right? But tell us about the group that are involved and the pursuit that you are all after.
Oh, well, Carol and Jason, thank you so much for having me on, and thank you for your coverage of this really important outbreak. The COVID-19 Early Treatment Fund was created to address the critical gap in our global COVID response, and that is to fund clinical trials of repurposed drugs that could lead to effective early treatments for COVID.
And so how do you identify those?
We have a scientific advisory board. One of the things that Steve Kirsch, who founded this organization, is a tech entrepreneur, and he's very fast-moving, results-oriented, but he's not a stranger to philanthropy in the healthcare area. And the first thing he did was assembled really a world-class scientific advisory board and got the word out for funding requests. So he has over 40 proposals. They've all been qualified. They've all been reviewed. They've all been prioritized. And all we need now is another $20 million to get the most promising 9 trials up and off the ground to rapidly get information on which of these may be most promising.
Dr. Danzig, where does this fit within the grand pursuit of a vaccine and treatments overall? Because I do think, Jason and I have had a lot of conversations that we all understand that right now there needs to be global coordination. So your effort certainly sounds interesting and promising, but how does it fit into that global pursuit to make sure that you're not kind of repeating something that somebody else is going after?
Yeah, this is a highly coordinated effort. There's a mad rush. There were 3 important papers on the list of repurposing. You need a little bit of duplication in science, but certainly not a lot of redundancy. Many look to a vaccine as the best hope for recovery, but we need tools. We need treatments and tools. And this disease is so unique because we don't just need antivirals. We also need immune modulators, and we also need rescue agents and strategies when people are in advanced stages of this disease. So, because of the 3 different types of therapeutic modalities that we need for early, moderate, and late disease, we need massive parallel efforts.
And so what are some of the early findings in terms of either identifying some promising potentials, or like how should we, as candidly, like regular people, be thinking about this in terms of what because we're all looking for some optimism, some ray of hope here. Give us some if you can.
Yeah, well, we're looking for the early yes and the early no. But
yeah.
Before CETF, Steve funded a hydroxychloroquine study that gave an early no. We're looking for the early yes. There are a number of interferon lambda studies enrolling right now. There's one at Stanford. It's more than halfway through. The DSMB halfway said, safety looks good, you should continue. If it didn't look good, we would have not continued. So that's encouraging. We got to get these trials enrolled.
What's interesting too is, and this is, I think, You know, Jason and I have talked to a lot of individuals, including just last week we were talking to the CEO of Inovio, and we've all been talking to the folks at Moderna, about the pursuit of a vaccine. But it's a vaccine, but as you said, we're going to need treatments, not just the antivirals. We're going to need treatments that can take care of people at different stages of the virus to prevent them from dying, ultimately. That's what this is about.
It's about both. So, the idea of an early antiviral, if you can prevent the second I get a positive test, early symptoms, then, maybe we can prevent with an antiviral the late stage immunological complications that wind up causing all the severe morbidity and require different kinds of therapies. So there are a lot of approaches in antiviral. There are a lot of approaches in immune modulators, things like interferon, things like IL-6 inhibitors. There are immune signaling pathways that are being evaluated for which there's encouraging results. People are looking at repurposing screens to see if some drugs on the shelf somehow inhibit the pathway, like doxazosin, the alpha blocker reduces catecholamine. So there's all sorts of really good work. The problem is there's 92 potential agents that we could look at. Wow. And so we're not going to get the data. We need a rapid screen of yes or no to help our ecosystem of drug manufacturers and accelerators and our network of larger trials to know which drugs are promising, which ones to accelerate, and which ones don't have a signal that maybe we need to rotate out of the system.
All right, we're speaking with Dr. Lisa Danzig, Chief Medical Advisor for the COVID-19 Early Treatment Fund, the CETF. She's joining us from San Francisco. We're going to continue this conversation in just a few minutes. We're going to do some news headlines and check on the market, Carol. It's an interesting approach for sure, and an important one, because it is marshaling a lot of big brains to go at this. And also, I loved what she said, which I feel like is a...
the early no's and the early yeses?
Yeah, exactly. There's a T-shirt for you.
I thought the same thing.
That's a really important point.
Yeah, I mean, the process of anything, I always, whether it's anything, any decision you have to make, it's, it's ruling in, ruling out, right? And that helps.
We do
you
it
so
all the
much.
time.
Right.
We probably don't do it as much as we should.
I always say it's like dating, right? You gotta say, okay, that's what I don't want, that's what I do want. No, but it's that process. I know. It just comes down to that.
Yeah,
All right,
I don't know how we got there, but go on.
Lots more to discuss, because I think this is an important element of ultimately getting control of the virus and preventing people from getting to intensive care and ultimately dying from it. You're listening to Bloomberg Business Week on Bloomberg Radio, and this is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Lisa Danzig. We're going to talk about what's most promising and how to think about all these different medical aspects of fighting this virus, Carol.
Yeah, exactly. I got to find out kind of what's the to-do list on their end. So we'll get to that in just a moment. Back to your top business stories and another look at that trading day. It is Monday, and here's Charlie Pell.
We are higher across the board here at or near best level of the day. And first, let me bring you this headline involving Delta. From the Bloomberg Professional Service, Delta says it's, quote, very cautious about adding capacity due to the coronavirus. United Airlines, by the way, will be reporting earnings tomorrow. UAL down 4.1%. American Airlines down 4%. JetBlue down 3%. Delta lower now by 2.7%. Equities higher across the board. A tech rally underway. Let's begin with NASDAQ up 207, up now by 2%. Year to date, NASDAQ is up 19.4%. To put that in context, the S&P back on the plus side so far for 2020, up by 0.5%, up 20 points today, up 0.6. The Dow Jones Industrial Average giving up earlier losses, up now by 30 points, up 0.1%. 10-year yield 0.61%. Gold up 0.3, $18.16 the ounce. And West Texas Intermediate crude oil up 0.6%, $40.82 a barrel. Royal Bank of Scotland Group has told most employees to work from home until next year as a precaution against the lingering coronavirus. Also, a coronavirus vaccine that the University of Oxford is developing with AstraZeneca has shown promising results in early human testing, a sign of progress in the high-stakes pursuit of a shot to defeat the pathogen. AstraZeneca shares, however, down 3.4%. Pfizer and BioNTech also reporting positive data. Pfizer up by about 1%, BioNTech up now by about 2.3%. Dr. Joshua Sharfstein is Vice Dean at the Bloomberg Johns Hopkins School of Public Health, and on Bloomberg Television this morning, he told us he's got some thoughts on what cities and states must do to curb the spread of COVID-19.
I think that really getting control over the situation in these states is probably going to require a greater degree of closing down certain things. I don't think it has to be a stay-at-home order necessarily, but I think to see where the virus is spreading and in those locations, not give the virus that opportunity, like particularly places like bars, which have just been the source of outbreaks all over the world.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. After the bell, we will be hearing from IBM. Shares up now by about 1.1%. Recapping equities higher, S&P up 22, up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get back to our conversation with Lisa Danzig. She is the Chief Medical Advisor for the COVID-19 Early Treatment Fund, CETF, joining us on the phone from San Francisco. So, Lisa, I want to jump ahead a little bit just because I want to make sure that Carol and I understand this, or at least I understand. I'm sure Carol already gets it. But, all this work, what happens next? Quick yeses, quick nos. You find something that works or a combination of things that work. How does it sort of get out to the public? What's the means of distribution here?
Right, that's a great question, especially it shows the beauty of the approach for repurposed drugs. In drug development, you've got to manufacture it. In vaccine, we're massively proceeding with this parallel effort to manufacture the vaccine before we even know it works. The beauty of the repurposed drugs is many of the things that we're testing are already in manufacturing, are already able to be used. So the barrier to scale up and distribution are really limited by the information. Does it work or not? There are a lot of groups. There's the NIH. There's a number of global adaptive trials where additional follow-up or confirmatory testing can be. So the first thing would be getting into broader trials. And then the second would be working with the generic manufacturers on their supply chain and their distribution. But it's a much faster process.
Lisa, why is it so important to focus on this kind of research that you guys are doing, I guess treatment research, right? As opposed to just working on a vaccine. And I do wonder what role the federal government, which has given money to teams that are working specifically on a vaccine, what role the government needs to have in this. Because I think we as a society need to understand, you know, like you said, we need a vaccine, but we also need these treatments. Like how important this component is to really getting control here.
Well, this is a critical component. I asked myself the same question in January as I saw this unrolling. I'm a vaccine developer and sitting on the sidelines saying, you know, how do I follow this? I'm following what I know, which is drugs, diagnostics, and vaccine development. And I didn't see the response. This should be part of a coordinated global and a coordinated federal response. And I didn't see it happening. And, you know, we don't have time to wait. And this grassroots effort, the people like me are self-activating, we're joining, we're teaming. All of the investigators that are submitting trials don't have a bias to the product that they're submitting. They want to work together. So we're really creating a global collaborative network to deal with the disease that we've never seen before, and we're just beginning to understand.
But how does something like remdesivir or hydroxychloroquine kind of get attention, right? That's a treatment modality. How do they get attention versus some of the other things that you guys are working on that maybe are not?
That's a good question. I'm not a media person. Obviously, they were there first. Okay. And they got amplified. And I think the point that I'm bringing is there are a lot of other places to look. Hydroxychloroquine, the data's mixed at best. We've got a bunch of negative data. We've got some safety concerns. Let's bring some other things in queue. Let's get us excited. There's 200 and some clinical trials for hydroxychloroquine. Let's convert some of them. And if somebody wants to look at our trials, we've got treatearly.org. There are 3 ways people can get involved. They can donate, participate, which means find a trial that's running in case you want to enroll or able to enroll, or apply for funding.
Is there, just lastly, just 30 seconds, are there any treatments out there that you think should be on our radar?
I'm watching the pegylated interferon lambda trial, which is running at a number of sites. We're watching favipiravir, which is an anti-influenza drug licensed in Japan that's being used in China and Russia for COVID. Camostat is it's a drug licensed in Japan for pancreatitis, and it's thought to inhibit an enzyme that's required to activate the spike protein to enter the cell. And you know, we're looking at monoclonal antibodies. There's a long list. Go to our website, treatearly.org. It's on it.
Treatearly.org. All right. Well, we really appreciate it.
And
Dr.
come
Lisa
back
Danzig,
to let us know how stuff is going.
Yeah, keep us posted. We really appreciate your work. Chief Medical Advisor for the COVID-19 Early Treatment Fund, joining us on the phone from San Francisco. I have to say, I mean, when I get sort of despondent about everything that's going on, I do think about all the scientists who are mobilizing around this. I think it's inarguably, in a way that they've never mobilized around anything before.
And we're all going to have to play a role because they do have to do testing. There's going to have to be human trials in order to get it up and running. All right, let's get back to World and National News headlines. On that is Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. New Jersey was an early epicenter of the virus. Now it's ranked 47th in the country for new cases. And even with the progress, Governor Phil Murphy says the state plans to give parents the option to choose an entirely online education this fall if they're concerned. Fresh off their 4th of July recess, lawmakers are mourning the loss of a colleague. Bloomberg's Irv Chapman has more on the eulogies on the House floor today for Congressman John Lewis.
Lewis led marches in Selma, Alabama to achieve a voting rights law that led to the election of more African Americans, Congressman Al Green noted.
He understood that the cause of justice will sometimes require some harm to be suffered, yet he marched on.
Representative G.K. Chesterfield.
When we would suggest that he might consider retirement, he would tell us, I've got to keep going. I want to see the African American Museum. I want to see the update of the Voting Rights Act. I want to see the end of police misconduct.
They called for a new voting law to restore provisions that the Supreme Court in recent years overturned. In Washington, Irv Chapman, Bloomberg Radio.
Georgia Democrats have chosen State Senator Nikema Williams to replace Congressman Lewis on the ballot this November. She's the chairwoman of the State Democratic Party. Her husband was a key aide to Lewis. It appears minds are changing concerning the kneeling protest by NFL players. A new Fox News poll shows 48% of respondents think athletes kneeling during the anthem is an appropriate form of protest. Back in 2016, 61% thought it was inappropriate. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Amazing how public opinion changes on something like that. Really interesting.
Yes, indeed.
In any case. Summer camps. This was a story that caught both of our attention, Carol, this morning. Rachel Adams-Hurd wrote it for Bloomberg. Summer camps bring ominous virus warning in test run for schools. It is fascinating to watch this play out. A lot of camps were canceled. Some weren't. But some are closing down because you're getting positive tests, and they just can't take a chance on keeping open. Proximity, we've both been to camps and had kids go to camp. You know how it is, and even with social distancing to a certain extent, these kids are still on top of each other. I mean, let's be honest.
Yeah, it's interesting. David Weston had a really interesting guest, too, on his show, who is very involved in vaccine development, who David asked, so would you send a kid to school? And he's like, I think that would be really problematic right now. You know, this is something that we are, grappling with, this whole idea of the younger population who for so long we've said they're going to be okay, but we're finding out, can they get it? They are getting it, right?
Yeah.
A younger generation, and they can also pass it on to an older generation who are much more vulnerable. So as you said, summer camps are finding counselors and students there coming down with the virus. And so it raises the questions about, how to open schools safely. That's what this is all about. I feel like this has been a test case for how do you open up schools.
Totally,
right?
absolutely. And I think school districts are watching this very closely. Governors are watching it very closely as well. In New Jersey, giving, I believe, the option to students to just go remote only. Starting in the fall.
Yeah, that's a big deal. New Jersey Governor Phil Murphy saying, yep, the state's plan for reopening will give parents that option to choose entirely online education if they're worried about the virus. And as both of us have students, this is going to be really tricky. I know my daughter cannot wait to go back to school.
Yeah, for sure. Yeah, same here. And we're just going to have to see how it plays out. And I think it's going to be region by region, state by state. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with an update out of California, where the number of virus cases has risen by 1.8%. That is less than the 7-day average of 2.7%. Stocks are now at the highest since February, with the stay-at-home trade thriving, even as investors get encouraging news on a potential virus vaccine. Treasuries advanced. S&P 500 index has turned positive for the year as its rally took it to levels last seen just as the pandemic was starting. NASDAQ and the NASDAQ 100 index both trading now at a record. NASDAQ up 219 points. That is a gain of 2.1%. S&P up 21, up 0.7%, bringing its year-to-date gain to 0.5%. The Dow up 20 points, up by 0.1%. 10-year up 3/32 with a yield of 0.61%. Gold up 0.4, 18.17 the ounce. And West Texas Intermediate crude up 0.6%, $40.82 a barrel. Recapping equities higher. S&P up 20, a gain of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you on a Monday afternoon.
Got a word for you.
Yes?
Awkward.
Yeah, Akko Taco, as the kids would say. This is a fantastic story. Couldn't get enough of it as I was reading it this morning. Sri Natarajan wrote it. A great quarter for Wall Street comes at a very awkward time, as Carol just said. He joins us on the phone from New York City. Bloomberg Business Week editor Joel Weber. He joins us from Massachusetts. Joel, talk to me about this. I mean, I feel like there are these times, I've said this on this program before, where like Bloomberg Markets Joel and Bloomberg Business Week Joel sort of collide, and it shows up in the magazine, and I love it.
Well, I've been. I think we've been begging Sri to write stuff for the magazine for years, and finally got his attention. No, I'm joking. But it was, I think, a really interesting week last week on Wall Street as all the banks reported their earnings, and basically it was just like one day, next day, and we just saw this constant trickle of news. And by the end of the week, I was just like, I just kind of want somebody to step back and write about this moment, because you guys said it at the top. It's like it's sort of an awkward one, where the trading revenue, which is something that had just basically disappeared, came back big time, but it was also a really awkward time for that to happen while everyone else has to sort of look on and is not maybe having as good of a life right now. So Sri, where did you guys take that story?
I mean, to really take from your point, Joe, you have to think about the fact that trading revenue truly had disappeared over the last 10 years, to the extent that it wasn't the same engine driving Wall Street power presence in their revenues and their profit numbers, because volatility had gone away. The markets were sort of ho-hum, and you were sort of along for the ride, but not really making a killing. That changed, and that changed. And remember, all these trading desk bosses, all these trading desk chiefs have been begging, even praying, to have that bout of volatility return to the market, so that they can show when there is heightened level of risk, when there is volumes being churned out left, right, and center, you can make big money, especially if you take some risk. You stand to reap big gains. But the problem is when this number has come through. Goldman Sachs, second best revenue ever in its history. JP Morgan, highest revenue ever. Morgan Stanley, highest revenue and the highest profitability ever. But can you imagine a worse time to be able to talk about it, because you're talking about a broader economy where a lot of people are struggling. So this perception of Wall Street's biggest investment bank making a killing, that perception at a time when everyone else is riding a tough economy, makes it, I mean, that's the main reason we're really calling it an awkward one. And the numbers show it, $45 billion for the top 5 investment banks. Yeah. Numbers we've never heard of in quite a while. And yet, for it to come right now, it does make everyone a little bashful on Wall Street.
Right. Shri, thank God they didn't cause the crisis, right? They didn't cause the pandemic. That's at least one thing on their side.
And that's the whole weird part here, right? And it comes across when you talk to a lot of the Wall Street executives. I mean, we pointed out as soon as their earnings came out, there were some analysts who came out. There was one analyst who came out and said, "Look, Goldman's numbers are frankly indecent. Will force more political action to come down the pike." And the people we spoke to said, "Look, that's unfair because." Perhaps you could make an argument for the 2008 global financial crisis that banks did play an integral part in bringing down the global economy. But you really can't make the case here. The virus was not birthed in the bank trading floor. They have just benefited from the actions taken by the Fed to prop up the economy from the massive surge in volatility, massive surge in volume, and they have been able to ride that wave perfectly well. However, that is not consolation enough for those on the outside, and you can truly understand why those on the outside are frustrated, because for them, whether it's a recession or not, Wall Street always wins. So when they see the narrative Wall Street winning, they see it as Wall Street winning again, and that's the problem that we're here.
Well, I think one thing that's interesting there, though, Sri, and this was certainly true in the earnings calls, and something that you bring in the story too, is that while this was maybe a pretty good quarter by the numbers, there's no indication that they can keep it up either, right? And even the CEOs and whatnot have indicated as much. So what does the future potentially look like here for the banks in future quarters?
Jamie Dimon is much better positioned than any of us, I guess, to sort of give us a sense of what it could look like. And he's actually saying we could see trading revenues drop by about, or at least the volume and the volatility and everything, that could lead to business and activity drop by about 50% for the second half of the year. That is to an extent understandable. The crazy levels that we saw in March, April, May, it is incredibly hard to imagine how that's sustainable. However, take a step back and think about the second half of 2020 that we're walking into. Think about the American election. Think about the various directions this pandemic can still take. Think about all the geopolitical flashpoints across the world. It's hard to imagine that you're going into a second half of 2020 that will be sedate. I don't think anyone can call it ho-hum. And if it's not going to be ho-hum, you can still expect the trading desk to make a killing.
And Sri, so is this mostly about raised eyebrows, or is there something more? Is this catching the attention of Washington? You quote one member of Congress making a comment about it, but is this the sort of thing that could catch fire during the campaign, especially if Joe Biden continues to gain steam here?
That's the unknown here, right? Which is you're 105 days away from another pivotal election in the United States. When you see numbers like this coming out of Wall Street, and when you see the struggles on Main Street and the broader economy, I cannot imagine any politician not wanting to jump on the bandwagon and go to the mat to say, hey, look, this system is stacked, this system is rigged, it is not helping ordinary people. Right. It is helping those who are already comfortable. So it would be a safe bet to think that people will capitalize on it and make it a talking point.
Yeah, I feel like it doesn't help that these guys are still considered banks when they really aren't traditional banks. I feel like, you know what I mean? Because I think banks are meant to help more of their communities and help in terms of loans. But they're really Wall Street, and that's why they get to play, and volatility helps them on the trading desks. It's a great story. Check it out. That story on the Bloomberg and at Bloomberg.com. Sri Natarajan, finance reporter at Bloomberg News, joining us on the phone in New York City. Joe Weber, editor at Bloomberg Business Week, on the phone from Massachusetts.
All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, it's going to continue right here. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Next up here, we're going to catch up with one of our favorite economists to talk holistically about what's going on in the economy, the issue of race and equality. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, July 20th, with the Dow, the S&P, and NASDAQ advancing. Stocks are at the highest since February, with the stay-at-home trade thriving, even as investors get encouraging news on a potential virus vaccine. Treasuries advanced. Right now, we have got the 10-year up 230 seconds with a yield of 0.61%. S&P's up 21, up 0.7%. The Dow up 12. Little change now. Points surging 2.1%. The NASDAQ 100 index at a record, up now by about 2.4%. So it is an up day today. NASDAQ 100 climbing after Amazon and Zoom soared on demand for companies that benefit from diminished economic activity. As for the economy and markets, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
We've had sort of a textbook drawdown around the recession. We've also had a textbook recovery around the recession. Those just happened very, very quickly. And now we're sitting at a position where markets are vulnerable to bad news again because of these extended valuations, because a recovery has largely been priced in at this point. And the 2020 election is one potential catalyst that could knock this market down.
Southwest Airlines says 28% of its workforce has agreed to leave the company permanently or temporarily, boosting the carrier's effort to preserve cash. Southwest Airlines shares today, they are trading lower, along with the rest of the airline group. Southwest down by 3%. UAL's down 4.4%, American down 4.1%, Delta Airlines slumping now by about 2.8%. Some of the other stories that we're following today: Chevron is buying Noble Energy for about $5 billion in shares as the oil giant looks to beef up amid the wreckage of the worst ever crude crash. Today we are seeing shares of Noble up 5.4%. Chevron is down by 2%. Crude West Texas Intermediate up 0.4%, while gold also higher by 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
You're listening to Bloomberg Business Week. Can I bring up something that we don't really have a spot for in the show, but I wanted to make sure we mentioned it?
Sure, please.
John Lewis.
Yeah.
I have to say, I was really... I am a former constituent of John Lewis. He represented me in Atlanta. My brother interned for him on Capitol Hill. He is, I think, by many, many, many accounts, including my own, a real-life hero in many ways. And reading, and I would just encourage anyone who hasn't, for whatever reason, read a lot about him over the weekend. There's been so much written. The tributes are so incredibly moving, and I think as someone who grew up in Atlanta, I'm acutely aware of a lot of the things that he did and what he represented and the things that he stood for and the things that he got accomplished, and the things he got accomplished with such incredible grace and presence. It's just remarkable.
I have to say, my husband, whose father was a minister, many of the big six ended up staying in their homes growing up. Yeah. And so, you know, my husband and I, we've been talking about this a lot in terms of these people who really put themselves out there in terms of the civil rights movement and truly, and at great risk to their own lives, made some tremendous changes in our society.
And it's a really interesting pivot and connective tissue to our next guest, who I'm really excited to have back with us, and that is Tendai Kapvizi. He is chief economist at Lending Tree. And one of the reasons I'm so happy to have him with us is we're sort of scheduled to talk about how Black Americans are more likely to be denied a home loan. And one of the things that I read a lot about this weekend when I was sort of getting deeper and deeper on John Lewis was that the civil rights movement in so many ways was economically driven, you know, that they used the economic might, you know, at various points. So Tendai, great to have you back with us. It's been a minute, as they say. How are you?
Doing good. Glad to be here.
So tell us about the work that you've been doing of late, and specifically as you have started to understand or continue to help us understand, I should say, some of the economic aspects of inequality and what you're finding.
Yeah, so what we looked at most recently is mortgage lending. And the reason we did that is because there's this huge gap in net wealth between Black Americans and white Americans. White Americans have about 10 times the wealth of Black Americans, and a huge chunk of that is because of disparities in home ownership. African American home ownership is around 40-something%. White home ownership is in the 70s. And then also just the value of homes is different across the races. And one of the drivers is this disparity in mortgage access or mortgage approval. So what we found is that the denial rate for African Americans is twice that for white Americans. And so, that removes a key access point for wealth building from African American households.
And I'm guessing that's even when you control for things like creditworthiness, right? That they are just unfairly not being given access to home loans.
Yeah, so when you control for creditworthiness, that gap narrows pretty significantly. It's like the chicken and the egg, right? So you can't accumulate wealth because you can't, purchase a home, but you can't purchase a home because you don't have, for example, generational wealth, inheritance, maybe to afford a down payment. And a lot of that stems from just the accumulation of really centuries of government policy. So this wealth gap is created by the government.
Tendai, this concept of generational wealth is a really, really important one. And help me out here, I do feel like from some of the conversations Jason and I have been having, is that's a big reason why we are seeing such tremendous gaps that persist even today.
Yeah, absolutely. So, there's a couple of ways that you can kind of see generational wealth play out. One is obviously to buy a house, you need a down payment. Oftentimes, people can access that down payment from family members. If you don't have family members who are able to assist you, whether it's your parents or maybe a rich uncle or whatever it might be, then you're less likely to be able to access home ownership. And then even probably a bigger effect is that the way that we fund schooling in the United States is largely a function of property taxes and property values. And if you live in a neighborhood where most people don't own their homes, then essentially, usually that value is not there. And so the schools are less funded because the people in that neighborhood have less wealth. And if you have less wealth and your schools are less funded, you get less education, and then that perpetuates, reducing access to opportunity into the next generation. So it really does, it's really linked from generation to generation, and that's why you can't just dismiss housing policies from the 30s and 40s and 50s and 60s and say they're irrelevant today. They really created this difference that we have today.
So, Tendai, just got about 40 seconds here. What would be one thing that could change this dramatically, just quickly?
Honestly, I believe that the most direct way to address this would be reparations. So really, the government created this wealth gap. They should close it up.
Interesting. All right. Well, we always love catching up with you. Tendai Kapfizi is chief economist over at Lending Tree. Some really important work. One of the things I love about Lending Tree, Carol, is the work that Tendai and others are doing. They have all this data that they're able to look at, and this study, which we just basically scratched the surface of, they went down into metro areas and sort of understood, where some of the largest spreads are. Milwaukee, St. Louis, and Cleveland are examples of that. It's interesting.
Well, and reparations, right? We've seen Asheville, North Carolina, right? They unanimously voted to give financial reparations to Black people. This is becoming increasingly a bigger political issue, especially with upcoming elections, and whether it's local elections or state elections. But this is something I think we're going to hear a lot more about down the road.
All right, you are listening to Bloomberg Business Week. Much more ahead. We're going to check in on what's going on globally, economically, check in about China as well with our pal Andy Brown. First, let's get down to Washington. Nancy Lyons is there with World and National Headlines.
Thanks, Jason. The confrontations are continuing between protesters in Portland, Oregon, and federal agents. Demonstrators set a fire in the entryway to the city's U.S. courthouse early today as authorities repeatedly tear-gassed them to drive them away. President Trump today applauded the government's response.
In Portland, they've done a fantastic job. They've been there 3 days, and they really have done a fantastic job in a very short period of time. No problem.
But Democrats are concerned since some protesters have been taken away in unmarked vehicles. Congressman James Clyburn.
That is the beginning of the ending of this democracy. That kind of activity is the activity of a police state.
City and state officials say they did not ask for the federal forces to intervene. A man possibly involved in the murder of a son of a New Jersey federal judge has been found dead in Sullivan County, New York. Officials say the man appeared before Judge Esther Salas in the past. He apparently died of a self-inflicted gunshot wound. Yesterday, someone disguised as a delivery man killed Salas's son, who opened the door and injured Salas's husband. She was in the basement of the home and was uninjured. The U.S. Supreme Court has refused to put disputes over House subpoenas for President Trump's financial records on the fast track, rejecting requests by House Democrats to formally return the cases to the appeals court level ahead of schedule. Lawmakers had asked the justices not to wait 25-plus days, as they normally do after issuing an opinion. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Well, this pairs nicely, actually, with the conversation that we had with Sri Natarajan and Joel Weber about Wall Street doing so darn well amid this global pandemic, $45 billion in profits across the big banks. Well, New York State, it is seeing a pretty big revenue shortfall here, and one way that they are proposing to make up for it, Carol, taxing stock trades.
The stock transfer tax, right, being resurrected. So, right, let's do the numbers. 1/5 of the state's revenue, New York State's revenue, it is disappearing. So they've got a projected 4-year deficit of $61 billion. We're hearing this, story increasingly across the nation, but New York City in particular because of the shutdown. So now they're talking about, we've seen stock trading. We talked about the volatility, right? It has been great for the Wall Street firms. Lots of movement. So every time there's a transaction, you tax it. And so taxing it would raise about $13 billion a year. And that would be a big help to New York City, which is looking at having to probably cut back either workers or services in order to get through this deficit.
So here's another really interesting statistic before people say, what? You're talking about taking from the retail investor and, raising taxes and things like that.
Could you?
84% of stocks are owned by the wealthiest 10% of Americans. That actually surprises me a lot. Doesn't it surprise you? 10%?
No. If you really do wealth and you look at incomes and so on and so forth, no, it doesn't necessarily. And that also explains, again, kind of that disconnect between Wall Street and Main Street that we continue to talk about.
Yeah.
Apparently, the Democrats are also considering some other things, Jason, about raising taxes on billionaires, large corporations, and second home purchases of $5 million or more. I mean, this is definitely going after the wealthier part. But, yeah, it's a good stat.
Well, and from a political perspective, one of the things that's important to note for people who live in New York is that the progressive Democrats have really gained a foothold in Albany. And so that's partially why this is getting some legs. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks are higher. The Dow, the S&P, NASDAQ all advancing. NASDAQ 100 index at a record. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
He was in the basement of the home.
NASDAQ outperforming again as Amazon gains 7%. Dow's currently up 40 points. S&P's gained 25. NASDAQ climbs by 2.3%. And FANG stocks are up 3.4%. The U.S. 10-year yield at 0.62%. WTI crude futures up 0.5%. And transport sank 175 points with airlines under pressure. Leaders to the upside in the Dow, Microsoft, Visa, and Apple, while Dow Inc., Walgreens, and Chevron led to the downside. After earnings, Halliburton rose as much as 8%. And in other news, ServiceNow hit a record high. And Electric reported that Tesla is aiming for record deliveries this quarter. Wrapping things up, IBM reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A-W-K, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much. Well, you're listening to Bloomberg Business Week. In his latest column, Bloomberg New Economy editorial director Andy Brown points out something that was written recently in a Financial Times column. It's about how to be in Washington is to sense a nation sliding into open-ended conflict against China with eerily little debate. I'm quoting from Andy's story. So we've got a few things to unpack here, and joining us as he does every week, Andy Brown on the phone in New Hampshire. There is a lot going on whenever you talk about U.S. and China. Tell us, though, Andy, why you highlighted specifically this Financial Times column.
Yeah, it just seems that both parties and both candidates in the election, sort of in the absence of anything that looks like a nuanced, balanced approach towards China, are just trying to outcompete each other on being tough. And, the latest example of this is this idea that the White House has floated, this trial balloon, to ban all 90 million members of the Communist Party from traveling to the United States and their families. So we're talking about, 300 million people, potentially, quarter of the population of China. And this kind of escalation is really incredibly dangerous. I mean, the only impact of a directive like that, were it ever to be implemented, would essentially be to halt all interchange between the United States and China. I mean, number one, it would prevent Xi Jinping, the Chinese president, from ever traveling to China. You couldn't have trade talks because pretty much all of the members of the Chinese trade negotiating team are also members of the Chinese Communist Party, as are many academics. And the question is, there are practical questions. I mean, since the Chinese Communist Party doesn't actually publish a list of its members, it's hard to know how on earth you would implement it. I mean, it's about as broad and sweeping as sort of a ban on all Muslims or something like that, which were ideas floated very, very early on. And so the column is sort of saying, look, we need to have an intelligent conversation about where we're going in all this. Is this what we really want? Do we want an open-ended confrontation with China, which could ultimately lead to war? If that's where we're going, then we should tell the American public what this is going to mean. This is going to mean big national, sacrifice. It's going to have a massive cost on the economy. Are you ready for all this?
So, Andy, I do want to ask you, because you're so good at giving this perspective to us, flip this around. If you're sitting in China and as a Chinese national, how are you viewing what's going on here at this moment?
Well, I think what the view from Beijing is very much that the West is out to, and certainly the United States is out to throttle us. They're not interested in engagement anymore. They look at the these increasingly hostile policy initiatives or trial balloons coming out of Washington, and they're asking themselves, they're hunkering down for a long-term, they're thinking the worst, Cold War engagement with the United States, and basically they're saying we've got to be self-reliant. And so you're accelerating precisely the trends which ostensibly you're trying to prevent, i.e., if we're serious about doing trade with China, we want to open their markets, we want greater engagement, we want American businesses going over there, we want bankers able to operate freely, brokerages and so on. And in fact, what you're doing is driving the Chinese to a position where they say, actually, this isn't what they want. We just have to go for autarky. We have to be self-reliant. Right. This is essentially economic war.
Well, and what's interesting, too, as you write in your column, Andy, is, voters need to be aware that there are alternative approaches to how we interact with China. And I think it's an interesting time. I heard somebody over the weekend say to me, Rome is burning, in describing America specifically, in that, we're in crisis, we're preoccupied maybe with some of the wrong things. Meantime, the rest of the world is kind of laying out their big, broad strategies. And I do wonder if the American public kind of really understands the gravity of kind of what's going on right now as a result of the administration.
Yeah, I mean, the alternative approach that you talk about is pretty simple. If you can't change Chinese behavior, and I think it's very unlikely that you are going to change the drift of Chinese industrial policy. Xi Jinping has concluded that a state-led economy, such as the one that he's building now in China, is a necessary political support for the Chinese Communist Party. I don't think you're going to change that behavior. You do what you can do, which is change your own behavior. Right. And so you get back to this, America needs a policy of national renewal, investment in science, in technology, in education, in healthcare, all the areas that are being exposed now by this coronavirus. So, what I was saying in my column is the Chinese look at these threats from the Trump administration. They probably dismiss them as unworkable. They're going to be looking at, Joe Biden's $2 trillion stimulus and taking that more seriously. So my point is, why don't we have a competition with China to reinvent the global economy, a sustainable global economy? Right. Let's compete with them on a green initiative. Let's compete with them on tech to create the technologies that will drive innovation, drive sustainable growth in the 21st century. Right.
It's a great win-win. It's a great idea, and everybody should check out Andy's Economy. His column, Bloomberg New Economy Director, Andy Brown.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to check in with Dave Wilson, a Monday edition of the Chart of the Day, Carol.
Yes, indeed. Looking forward to it. We'll get to that in just a moment. Let's get back to your top business stories, and let's get another update on that trading day. Charlie Pellet, 29 minutes to go.
29 minutes to go ahead of the closing bell. Carol Master, happy Monday. We have got the Dow, the S&P, and NASDAQ. They're all advancing right now. Stocks are pushing higher. Technology is rallying. It is certainly the standout today. Right now, we have got the NASDAQ Composite Index surging by 258 points. It is up by 2.5%. S&P, to put that in context, up 30 points now, up 0.9%. The Dow up 71, up 0.3%. Got to mention the year-to-date numbers on the S&P, up by 0.8%. NASDAQ by comparison for 2020, it is up by 20%. 10-year up 2/32 with a yield of 0.61%. Gold up 0.4, 18.17 the ounce, and West Texas Intermediate crude up 0.3%. Right now, a barrel of WTI is at $40.73. Well, some of the other stories that we're following today, a coronavirus vaccine the University of Oxford is developing with AstraZeneca showed promising results in early human testing. It is now set to move into larger trials that are unlikely to be decisive on how effective they truly are. The results are not enough to convince the market, however. AstraZeneca shares, they are trading lower right now. AZN, we're talking about the American Depository Receipts, down 3.4%. Pfizer shares, they're up 0.9%. And shares of BioNTech today surging by 4.8%. So it is an up day for the U.S. stock market. Dr. Joshua Sharfstein is Vice Dean of the Bloomberg Johns Hopkins School of Public Health. He says he is encouraged by the sheer volume of vaccine studies that are now underway.
Well, I think what's good is that we haven't been derailed yet. I mean, there are all kinds of problems that could have happened so far that haven't happened, and we have multiple candidates getting into large trials, multiple candidate vaccines, so that's another good sign. But truthfully, you just don't know. A lot of these early vaccine studies are with new types of vaccine platforms that we really hope are going to work, but you just don't know until you do the study.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Chevron's buying Noble Energy for about $5 billion in stock as the oil giant looks to beef up amid the wreckage of the worst ever crude crash. Shares today of Chevron, they're lower by 1.8%. Noble up 5.7%. West Texas Intermediate crude up 0.4. Gold also up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
Your love is like a seesaw. Your love is like a seesaw.
It's a great old song. Really great old song.
Who is it?
I don't know who it is, though. And I'm not going to cheat. I'm turning a new leaf. Dave Wilson, come on in.
All right, Dave Wilson. Who is this? Your love is like a seesaw.
Oh, I would not have guessed that.
Not a chance.
I mean, not one of the better-known singers out of Memphis.
Great, though.
Not exactly a Wilson Pickett or
Right.
Otis Redding.
50s?
To the charts,
50s, 60s?
Yeah, 60s, 70s,
Yeah.
absolutely.
Very cool.
Certainly, I mean, because that's, the 60s were, the era for Memphis soul music, Stax Records and all the rest. So anyway, why that? Because when you look at investor sentiment on U.S. stocks, it's sort of like a seesaw. And the way you can tell, I mean, it was interesting. I was reading this note on Friday, posted up on Sentiment Trader, their financial blog. And the analyst who was doing it, Troy Bombardier, who used to be a hedge fund manager, I mean, he cited this Bloomberg indicator that I'd never seen before. It's sort of buried deep in the middle of our technical studies. It's called the fear-greed indicator, which basically looks at moving averages and decides on, whether people are really pushing into stocks or pushing out of them. in essence. And Bombardier specifically looked at the NASDAQ Composite Index. And when you take a look at this chart, you see that, what we had earlier this year was a record going all the way back to the mid-90s when, our indicator starts. And then within a couple of months, you went from a record low to a record high and then some. And it really just shows you, how things have changed over time, as we've seen stocks sell off, 30% plus if you look at the S&P 500, and then manage to make most of that back. It's unusual, the kind of swings that we've been through and the sentiment shifts that have gone along with them. You've gone from a record low to a record high in the space of about 3 or 4 months.
Well, that's the story, right, Dave? That's the story of these past 3-4 months, right? The incredible swings that we've had, how deep they were, and how quickly they all happened.
Absolutely, and what we've been seeing now in terms of the highs in this particular indicator, and higher than it was in March 2000 when stocks were peaking, and there have been a lot of comparisons made to 20 years ago, so that's particularly relevant. If you want to know more, folks, send me an email, get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave Wilson, that up and down, obviously that volatility is one of the reasons that the big Wall Street banks made $45 billion last quarter, right,
See,
Carol?
there actually is a theme today.
There is a theme. People making money. People making lots of money.
Volatility,
And
swings.
volatility. Yeah, exactly. So, all right, Dave Wilson, you'll be back with us just after the close of trading for your stock of the day. And, meanwhile, you heard Charlie Pellet talk about it. I mean, stocks are, I believe, close to their highs of the day still, Carol.
Yeah, it's interesting. Well,
Just taking a look at the
Vince
S&P right
Signorella
now.
was great. Earlier
Yeah,
sent me a
highs of
story
the
and he
day.
said, we're up pretty much, and we're continuing to take a leg up. Here we are with just about 20 minutes left to go. Initially that news with that Oxford AstraZeneca virus, there were some concerns. Promising, initially in terms of some of the results. It's a small trial, it's early, it's preliminary, but there's also, they talked about that when you give a second vaccine, that it's even better. So that raises the question of, wait a minute, okay, how long does that take, and so on and so forth. So there was some concerns, and the market took a dip on that, but we are definitely seeing momentum. This is going to be a big week. We have some really prominent names in the technology space, and like Gina Martin Adams said at the beginning, to see what they say that hopefully justifies some of the run-ups that they have seen in their share prices and their valuations. I think that's going to be very key to sentiment, really kind of staying with us, at least upbeat sentiment.
18% of the S&P, value of the S&P, reporting this week, and it's even bigger next week. So, these are the key 2 weeks in terms of really understanding where we are from an earnings perspective. And as you wisely say, every time it gets around to this time of the quarter, this is the report card, and never was a report card more important than it is right now, a progress report, as it were, on how companies are doing.
Yeah, the gains, though, I'm going to say, are limited to a few sectors, though, today, so not broad-based.
All right, let's get to world and national headlines now. Nancy Lyons got them. Hi.
Hey, Jason. President Trump met with top Republican congressional leaders today at the White House on the next COVID-19 aid package. As the virus worsens and aid is expiring, Congress is considering what to do next. President Trump said good things were happening. Treasury Secretary Steven Mnuchin outlined some of their priorities.
We've said the number one issue is we have to fix the technical fix on enhanced unemployment. We're going to make sure that we don't pay people more money to stay home than go to work. We want to make sure that people who can go to work safely can do so. We'll have tax credits that incentivize businesses to bring people back to work.
Speaker Nancy Pelosi's House has already passed a sweeping $3 trillion measure from Democrats. Scientists at Oxford University say their experimental coronavirus vaccine has been shown in an early trial to prompt a protective immune response in hundreds of people who got the shot. British researchers first began testing the vaccine in April in about 1,000 people, half of whom got the experimental vaccine. Such early trials are usually designed only to evaluate safety, but experts were also looking to see what kind of immune response was provoked. Scientists say they found their experimental COVID-19 vaccine produced a dual immune response in people who got the shot. As the NFL works on a league-wide policy for running the season this year, the New York Giants and the New York Jets have jointly announced they will play their games at MetLife Stadium without fans until further notice. The decision comes after New Jersey Governor Phil Murphy limited outdoor public gatherings in an executive order. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thanks so much. You're listening to Bloomberg Business Week. This is one of my favorite stories of the day. It's not a happy story in many cases, and I think one of the reasons I was really interested in it, Carol, is because in normal times, you and I travel quite a bit for work, doing cool remotes, fun things. Yeah. We get to go see the people, go to business schools, do cool things like that. The end of business travel as we know it. Cue the REM, right? I mean, it's really kind of amazing that the leaders of the industry are basically coming out and saying, look, travel's going to rebound. It's something that will happen. But business travel is fundamentally changed and fundamentally diminished.
Yeah, exactly. This is one of our most read stories on the Bloomberg. And there's one aviation consultant that Mary Schlingenstein and a few members of our team have put out on the Bloomberg. And this consultant says it's, one of those unfortunate cases where the industry will be permanently impaired and what we lost now is gone and never to come back. And you're right, business travel, I just think people are going to say, oh, just have a meeting. You know what I mean?
Have a Zoom.
I think it's different for some of the stuff we do because we're on location and we're tapping into guests that we wouldn't normally get. But I do think those, impromptu, let me get on a plane and I'll go have a meeting with them. I just don't think that's going to happen anymore. And that, yeah.
Yeah, I mean, I think what I wrestle with, too, is this notion of, again, sort of thinking in a self-interested way, we go to do remotes with, small groups of people, but then we also go to a lot of big conferences. I just don't see
that happening
the big conference
soon.
Coming back anytime soon. Now, maybe in a few years it does, but if you go a couple years not having like that big gathering, that big annual gathering, how long until people are like, yeah, we don't really need to do that?
Yeah. Does it really make a difference that I
want? Do we need to spend all that money? Do we need to ask people to spend all that money all the time in travel? On the other hand, we're social creatures. People love those sorts of things. We love those sorts of things. So I don't know. I'm really torn about it.
People are saying even after maybe 2 months, business travel will be down at least 25% below those pre-pandemic levels.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Summer rally. Stocks are sizzling. Stocks now at the highest since February, with the stay-at-home trade thriving, even as investors receive encouraging news on a potential virus vaccine. S&P 500 index on track to close positive for the year. Its rally now at levels last seen just as the pandemic was starting. NASDAQ 100 index at a record after Amazon and Zoom soared on demand for companies that benefit from diminished economic activity. Here's where we stand. S&P 500 index up 32, now higher by 1%. NASDAQ is up 274, up 2.6%. The NASDAQ 100 index up 3%. The Dow now higher by 62 points, up 0.2%. 10 years up 3/32 with a yield of 0.61%. Gold up 0.4%, 18.18 the ounce. And West Texas Intermediate crude up 0.3%, 40.71 a barrel. Brent 43.22. The global benchmark up today by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, let's hit the drive to the close on this accelerating day, I feel like, of green, Carol. See
It's
what
like
I
pretty.
did there?
I did see very nicely done, but it's pretty remarkable, right? The momentum
It is.
here.
It is. So who better to talk to us about it than JJ Kinahan, Chief Market Strategist for TD Ameritrade, joining us on the phone. JJ, how the heck are you? It's been a while.
Yeah, your luck ran out. So far, so good. How about you guys? Hope everyone's healthy and happy.
We're doing okay. We're doing okay. Week 19, I think, from broadcasting from our respective homes here in New York and New Jersey. So it's obviously a different world, I think. I think we've talked to you since the pandemic set in, but I don't think anybody expected it would be this long. And meanwhile, we've got a market that seems to be, by some accounts, kind of defying gravity here, especially when it comes to tech stocks. What are you seeing?
Well, it's really amazing. You know, you guys talked about it in the news flash just right there. You see Microsoft, you see Amazon, and what I really find amazing is going into earnings to have the analysts update, giving upgrades on the stocks right before we go into them. It's a risky move on their part. You normally don't see that. But what then concerns me is, even if these are amazing earnings, which obviously everyone expects them to be, can that sort of carry the day after earnings, or is it going to be a sort of buy the rumor, sell the news, because the expectations are so high heading into these tech earnings? After banks did okay, but kind of did what we expected, and that trading revenues were good, and everything else, when your net interest margin gets squeezed, it was just so-so.
Well, what would you do if they're disappointing, considering the run-up, especially some of those big tech names?
I think it really changes the momentum, Carol, to be honest with you. Right now, even though, as we just got done talking about being the stay-at-home trade, et cetera, I think we have sort of positive momentum that at some point here will come out of it. Things will resume. I don't want to say as they were, because I don't think they're ever going to be exactly as they were, but in a good way or better way. With that said, if these stocks, which we're all relying on to be the leaders, and to their credit, they have been, don't meet these expectations, it gives you a little bit of a head scratcher. It's in a weird way, it's like the mature technology stocks have become a little bit of the safety play during this whole time.
Why is that? Well, is it just because they're not so they have become such a part of our lives, personally, professionally?
Absolutely. And, when you see these analysts talking about the fact that, like, Microsoft's Azure platform, had to exponentially start performing and all of a sudden 12 months of development cycles came flying through really quickly. And with that, they didn't have many problems. I think that that really gives people some excitement as to the opportunity there and how quickly other things that really sort of change our lives, if you will, can come out. The other thing is, and we can't forget about the fact that you have a 62 basis point 10-year yield, and it just doesn't excite anybody. So I think people are also saying, okay, if I'm heading to retirement or whatever it may be, do I want to put a lot of money there, or do I want to try and get capital appreciation from stocks I trust? You know, some have yield, some don't, but overall, they've been solid, and that capital appreciation has certainly been much better than the yield play right now.
I still am sort of puzzled, and maybe I shouldn't be, JJ, around all things transport here. You know, especially as we're talking about business travel, Carol, you know, just basically never coming back to the levels that it was. As an investor, how should we be thinking about either the big airline names or even more broadly the hospitality and travel business?
Yeah, you know, it's interesting. Our clients really took to them in March and April, I think last time we talked, because there was sort of a government, you know, netting there, if you will, or backstop. Now that they've rallied a bit and haven't really perhaps had to take up to the level maybe we thought they would, you know, particularly with what we've heard out of United and American recently, I think that this is a little bit of a riskier investment at this point. And as we see, you know, some restrictions being loosened, then put back, you know, you're really betting on a recovery. What I would say is if you're investing there right now, I would really think about a longer time frame. A lot of this investment depends upon what's your time frame. If you're doing it for a quick hit, you're taking quite a risk. If you're saying, you know what, I think in 2-3 years we'll be back to a level where, you know, even international business travel is going again, then that investment makes more sense to me. And I think too often retail traders don't take their time frames that they say it's a long-term investment without defining that. Or short-term, I think particularly now, you have to define that more than ever.
So when it comes to some of these specific names, whether it's a Netflix, whether it's a Microsoft, whether it's Tesla, are there any, though, that really stand out for you that you think should be kind of part of an investor's portfolio at this point, JJ?
Well, I do think Microsoft is one that you could probably trust, if you will, because it's a more mature company. And I think that that's what we're seeing out of our clients, et cetera, is that with that, it's a company that you're like, okay, you know, this makes sense. When it comes to a stock like Tesla, not to poo-poo it, but, you know, I like to look at the options market a lot. Even if you don't trade options, they give you an idea of what people are pricing in. If you look at Tesla, and if you were going to hold it for 32 calendar days, the implied move right now is almost $480. So when I ask people, if you're going to buy Tesla, do you have the stomach for it to move? An expected move could be $480 against you as well as for you. Right. Do you have the stomach for that? And I don't think people consider that enough when they go into these types of investments.
I'll take that as a no. That should not be a standard in your portfolio.
That's a big swing.
That might be a little bit riskier part of your investment.
Absolutely. JJ Kinahan, great to spend some time with you. Thank you so much. Chief Market Strategist for TD Ameritrade, joining us on the phone from Chicago. Love when he gets specific and, you know, just talks about some of both the trends, but also some of the individual names that we all think about all the time. We talk about them all the time on this show, Carol.
Yeah, totally. You know, and not all tech should be necessarily grouped together, right? Yeah. Not all tech companies are the same, I think, you know, so it's a good way, especially when he says, like, look at the options market. That gives you a really good indication of what investors are thinking. All right, folks, just got about 3.5 minutes left in today's
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, July 20th. The Dow, the S&P, NASDAQ all advancing. NASDAQ and the NASDAQ 100 index both at records. First, this headline from the Bloomberg Professional Service. U.S. virus cases up 1.3%. That is the slowest daily increase in 2 weeks. Let's get right to the numbers. I'll give you the why in just a moment. S&P up 27, rise today of 0.8%, 32.51 right now on the S&P, bringing its year-to-date column turning positive for the year again, up by just about 0.7%. The Dow off its session highs, up 9 points, a little change there. NASDAQ at a record, up 263, up 2.5%. Its gains for all of 2020, an even 20%. 10-year up 430 seconds. The yield now 0.61%. Gold up 0.5%, 18.18 the ounce. And West Texas Intermediate crude up 0.2%, $40.63 a barrel. So it was an up Monday for the U.S. stock market with the Dow, the S&P, and NASDAQ all climbing. Earnings season upon us. J.J. Kinahan is chief market strategist at TD Ameritrade.
What I really find amazing is going into earnings to have the analysts giving upgrades on the stocks right before we go into them. It's a risky move on their part. You normally don't see that.
A coronavirus vaccine the University of Oxford is developing with AstraZeneca has shown promising results in early human testing. Wall Street, though, less than impressed today. AstraZeneca's ADRs falling today, down by 4%. Some of the other biotech names that did see movement today, Pfizer up by 0.7%, and shares of BioNTech up today by 3.5%. So an update on Wall Street, again recapping the Dow, the S&P, and NASDAQ all advancing. NASDAQ at a record up 2.5%, S&P up 0.8, the Dow little changed, up by 9 points. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Your next move will be your last.
Nobody move a muscle.
Damn, Sippy, you got to move.
And I'm moving from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, everybody. One day done, I should say. I don't know what I was going to say.
One day more.
Monday, it was a busy day, lots of news, and really interesting to watch the market trade because it was kind of going nowhere. And then we definitely picked up momentum on the technology trade. And as Charlie mentioned, 2.5% higher on the NASDAQ. So we just finished just off our highs of the session. So some momentum where we are awaiting a lot of tech earnings. So we will see whether or not those run-ups in the tech names, those higher valuations, whether or not they'll be justified ultimately by the tech earnings that we'll get. IBM, we're waiting for it to cross the Bloomberg terminal. If I look at the major industry groups, and we talked about this a little bit, I think, with Dave in terms of how broad-based the rally was, Jason. You have four major groups in the S&P 500 that were higher today. Consumer discretionary up 3.2%. Information technology up about 2.7%. Communication services up about 1 1/3. Healthcare, call it flat on the day. Everything else was lower. Energy at the bottom of the pack down 1.7%. So not a broad-based rally. As we said, tech names really ruling the roost here.
Yeah, I mean, Amazon was your number one gainer, right? I mean, and it makes sense. And I think Dave mentioned it at the top of the show when he was breaking down kind of what's been driving this. And when you think about consumer retail, that's actually Amazon at this point. I mean,
Right.
So I guess one of the things that I keep coming back to is this notion of, for ease of use and because of its kind of heritage and things like that, we call Amazon a tech name. It's not actually a tech name in many ways. I mean, it is tech-enabled, and the cloud certainly is the tech part of it. But when it comes to its real role in our lives and in the economy, it's
retail.
a retailer.
It's a giant, massive online retailer.
Right.
Exactly.
And sometimes I don't know. I feel like we lose sight of that a little bit.
Right, exactly. And you really have to go though and take a look at its revenue breakdown, right? I mean, global technology services though, Jason, are about 27 billion in revenue. Like, I don't know exactly how they break all this down based on at least the categories we have on the Bloomberg, so I think it can be confusing, but you're right. They are still a massive retailer, online retailer.
Yeah, and it's interesting. So, just sort of looking at the other things that are moving. I mean, one notable name, in part because...
Can we do IBM? Actually,
yes,
they
please.
just came out.
Go ahead. Speaking of tech. Go.
Yeah, they just crossed. Second quarter revenue looks like it's better than forecast, 18.12 billion versus 17.62 billion. So that's a beat. Operating EPS also beat 218 a share. That is 6 cents better than Wall Street was forecasting. Second quarter cloud and cognitive software revenue, 5.75 billion, also a beat. 5.58 billion was the estimate that was out there. Total cloud revenue for the second quarter, 6.3 billion. Jason, that's up 30% year over year. I want to know a little bit more about these numbers.
Yeah, so the stock is trading up. It's up about 3%, give or take, now closer to 4%. I mean, Red Hat, I think, is, when you look at cloud, I mean, Red Hat is the big driver there. So Anurag Rana, I believe, is going to be along with us in just a bit to break that down for us. And if this is a harbinger for tech, for big real tech, big hardcore tech, then that is something, especially if they are giving an indication that enterprise spending is going to be something important. We definitely want to take a look at that.
Yeah, we'll be watching that, and we'll dig into that, and certainly what they have to say on their call today about the outlook. And they've been, going through a shift in their business for several years. So if it's starting to pay off, exactly, lots of changes. So we will certainly get into that. S&P 500, I didn't give the big picture, but let me just do that real quickly. I did give you an idea, though, in terms of the major industry groups. Most names in the S&P were lower today, 325. Were showing declines, 178 actually showing some gains, 2 unchanged. So that just shows you how much of the run-up that we saw in the markets today really concentrated in certain areas.
All right, quick look at volatility. The VIX down about 4.4%, closing at 24.55. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us. Talk to us about your stock of the day.
Infinera, Jason. It's a maker of fiber optic equipment for phone networks. The company's name is a variation on infinity. And that's in keeping with their mission, cited on their website. Enable an infinite network that can provide unlimited services to everyone, everywhere, always, and instantly. Infinera was founded in 2000 and went public in 2007. The ticker is INFN. The shares more than doubled in the first 2 weeks of trading and then gave back the gain within 6 months. At this time last year, they were coming off a record low. Infinera rose today on anticipation that Verizon will use the company's equipment in a network upgrade. Communications website Light Reading reported the phone company used Infinera's gear to successfully test a high-speed fiber link over 400 miles. How high? 800 gigabits a second. That's about twice the current limit. Verizon's preparing to handle more data as 5G wireless services introduced, and Infinera's potential role was highlighted in a report out of Needham. The company's shares rose to the highest price since February, and they closed with a gain of 10.2%.
Not too shabby, right?
Not shabby at all.
All right, Dave Wilson, thank you so much. We will catch up with you tomorrow for your market insights, your chart, and your stock of the day. We're going to get into IBM in just a minute, Carol.
Yeah, right, because the stock, as you mentioned, it's definitely on the move in the after hours, and I want to know a little bit more. They've been transitioning increasingly to the cloud and whether or not, we've kind of turned a corner. Stock's up about 4.6, 4.7% here, Jason, in the after hours. So our Anurag Rana will give us, kind of the lowdown on the quarter and the outlook.
He will indeed. And then we're going to catch up with the president of Bowdoin College. Really interested to catch up with him and with Janet Lauren as well. Get the world of higher ed an update there. First, let's get an update from Ed Baxter. He's out in San Francisco with World of National Headlines. Hi, Ed.
Hi, Jason Carroll. New York, as you know, in phase 4 reopening, sans indoor.
So many things are moving forward, heavy emphasis on outdoors, but when it comes to certain indoor activities, that's where we keep holding back. So we're holding back indoor dining, museums, malls, things that we're still not certain can be done right.
Mayor Bill de Blasio says it may not be for a while. In New Jersey,
we do feel confident that in an outdoor setting and with the proper public health and safety protocols in place and being followed, by the way, these sports, as we had predicted, may resume.
Now, New Jersey Governor Phil Murphy talking about football and rugby, again, not indoors. Now, the pros, Giants and Jets, will play their games without fans at MetLife Stadium until further notice. Governor Murphy also said the state's plan will give parents the option to choose entirely online education if they are concerned. And New York Governor Andrew Cuomo is threatening to close down all bars and restaurants if large street gatherings continue ignoring social distance and mask regulations. California cases have slowed almost a point lower than the 7-day average. Hospitalizations also slowed, some stability. And Governor Gavin Newsom says the basics now need to be followed.
This transmission can be substantially mitigated by wearing face coverings, by wearing face masks.
And he says the guidelines need to be followed. President Donald Trump says he'll begin task force briefings again.
I'll get involved and we'll start doing briefings, whether it's this afternoon or tomorrow, probably tomorrow, and I'll do briefings.
Yeah, and it looks like tomorrow. And now he has tweeted a picture of himself wearing a mask and calls himself patriotic. Global news 24 hours a day and on Quick Take by Bloomberg in San Francisco. I'm Ed Baxter. This is Bloomberg.
All right. Well, the story of 2020 and more likely the story of 2021 and onward, Carol, is going to be New York City, live, work, a little bit less of each, a little bit more of one. Hard to say, but interestingly, the Partnership for New York City, this is comprised of literally the top CEOs in New York City. I mean, if they run a big firm or company, they've been involved in this. You're talking about Henry Kravis, Jamie Dimon, so many others. Kathy Wild runs it. She is a force of nature across New York City. These are kind of the kingmakers in many ways, the kings and the kingmakers, to say the least. About 1 in 4 employers, based on a survey that they just did, intend to reduce their footprint by at least a fifth, so 20%, and about 16% expect to move jobs out of the city.
That's a big deal.
It's a big deal.
Companies also expect only 10% of their employees to return to the office. Let's do that again. Companies also expect only 10% of their employees to return to the office this summer and just 40% by year end, according to the survey, which was conducted in May.
That second thing I think is the most important.
Yeah, I think so too.
And here's the reason why I think it's important, because I think behavior changes, routines change. I think you and I have both experienced this. I mean, 19 weeks
But don't you want to get back? I want to get back.
I do want to get back. But as I talk to a lot of people, like here in my neighborhood, we have a lot of, socially distanced conversations. And, what a lot of people say is, I don't want to go back for 5 days a week.
Mm-hmm.
I hear that a lot. That I would say, if I had to generalize the theme across every conversation I have, is like, yeah, I'd like to get back. I had a conversation just over the weekend with somebody who works at one of the big banks, and he was like, yeah, I'm going back. I'm excited to go back. Definitely want to do it. Not sure I want to do it 5 days a week.
Well, this is what we're going to have to see, of whether or not employers are going to be more flexible about this, whether they're going to need to be initially, but we'll see if longer term what ultimately sticks. So stay tuned, everybody.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a recap of IBM's numbers. It did report revenue for the second quarter that beat the highest analyst estimate. IBM shares surging after hours, up now by about 6%. Second quarter revenue, $18.12 billion. Estimates there, $17.62 billion. Second quarter operating EPS, $2.18. Estimates there, $2.12. Second quarter total cloud revenue, $6.3 billion, up by 30%. Again, IBM shares are trading higher after hours, up today, up right now by about 6%. Stocks advanced, now at the highest since February. The stay-at-home trade, we're looking at companies like Amazon and Zoom. They're thriving even as investors get encouraging news on a potential virus vaccine. S&P 500 index has also turned positive for the year. Here are the numbers. S&P up today by 0.8%, higher by 27 points. It's a year-to-date gain now by, it is now at 0.65%. The Dow off session highs, up 8 points, little change. Nasdaq at a record, up 263, up 2.5%, and bringing its year-to-date gain to 20%. Nasdaq 100 index also at a record, up today by 2.9%. 10-year yield 0.61%. Gold up 0.4, 18.18 the ounce. West Texas Intermediate crude up 0.3%, 40.71 a barrel. Again, recapping an earnings beat out of IBM. S&P up 27, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's get into it on IBM. You just heard Charlie talk a little bit about the stock reaction and some of the headline numbers. Anurag Rana with us, senior software and IT services analyst for Bloomberg Intelligence, joining us on the phone from Chicago. IBM, big day, Anurag. This looks pretty good. Investors are excited. What are the big drivers? What's the main thing we need to know here?
Yeah, it's a surprising result. Numbers much better than what the street was expecting. I think the two things that stand out to us right away are their hardware sector or the systems segment, as well as cloud. Now, it's so odd because one is fairly, some of the oldest products that they have, and cloud being the newest one. Those are the two areas where we saw strength. Now, in the systems segment or the hardware segment, the company is undergoing a product refresh cycle, and it seems that, that really helped growth this quarter. And the second one, obviously, the Red Hat contributing to cloud sales, that's the other big driver.
So, that IBM, Anurag, has been trying to kind of transition itself, what kind of company it is. Is this a quarter that shows that the things that they've been doing, the steps they've been taking, that they're kind of on the right track and they are transitioning them, kind of what the IBM of the next 20 years will be?
See, I think the strategy is sound. The question is execution, and obviously the biggest question right now is macro. So while the current quarter is good, I think we just cannot ignore that the global IT spending is under pressure, and clients will have a hard time to spend more coming out of I would say in the next few quarters. So strategically good thing for IBM, but there's a lot more work that still needs to be done.
Anurag, I'm always interested, and I know Carol is too, about kind of what this tells us about the broader world. I mean, IBM back in the day certainly was just a major bellwether, maybe a little less so these days, especially in light of all the other big tech names that we talk about all the time. And we talked about the fact that Amazon, obviously, which is a behemoth in both cloud and online retailing, your number one gainer on the S&P today. What does IBM potentially tell us? And maybe we'll need to hear a little bit more from them on the call to really gauge this. But what do these results at least tell us about demand out there?
I think one of the things about IBM and most IT services companies is that their revenue is tied to long-term contracts. Mm-hmm. So when you have a sudden pullback in spending, you could see it in certain areas such as consulting, which we saw. I was actually expecting the hardware numbers to be a bit softer as well, but that didn't happen, which means companies were upgrading their hardware. Now, the thing that we want to hear on the call is commentary about new bookings or new kind of work that's flowing in, because what comes in bookings now is going to be recognized as revenue going into the next few quarters. So those are the most important things that we would be hearing, we'll be listening to on the call.
What do you want to ask them? What would you want to ask them, Anurag?
I would really want to know is whether the infrastructure problems that people have had, their clients have had over the past few months, whether they are willing now to take a lot of that and say, okay, we're going to move to the cloud much faster. Because, if you were to see, bulk of the IT spending is still on premise, and it's taken people a long time to, redesign their IT infrastructure. But something like a COVID-19 or a massive event like this could force clients to say, we have to embrace clouds in a much faster way so that we are prepared for any such, problem going forward.
Mm-hmm. What's the read on the new CEO so far?
I mean, I would say the narrative is really strong about how to work with rivals and to give the right tools to everybody at IBM to progress further. But as I said, macro headwinds sometimes are so strong that even that cannot, offset that kind of positive attitude.
Right. Interesting. And last question for you, and you alluded to this earlier. I mean, Red Hat, that was kind of Jenny Rometty's on her way out, kind of bet the farm sort of deal. It feels like it's paying off so far, fair to say?
Yes, and nothing to take away from Jenny on for this particular deal, but I believe that the current CEO had also a big role to play with this deal, which is why I believe he got this job, is because I think this could be a transformative, acquisition for IBM. But as I said, execution risk is high, and it's not going to be easy for them.
And that is a ferociously competitive part of the tech world, I think, to say the least.
Yeah, totally. All right, Anurag, thank you so much. Really appreciate that analysis. Anurag Rana, he's Senior Analyst of Software and IT Services at Bloomberg Intelligence, checking with us from Chicago. And we are seeing certainly IBM move to the upside. Listen, Jason, this is maybe some of the momentum, though, that investors are looking for. And this is something that will certainly play in the broader market as well as within the tech space. So, and you guys were talking about Red Hat contributing close to $1.1 billion in the quarter.
Yeah.
It's a big deal.
It's a big deal. I mean, and I remember, talking and writing about that deal, writing about that company way back in the day down in North Carolina.
Red Hat?
North Carolina,
Red Hat specifically?
Yeah.
Yeah.
And then when IBM bought them, I mean, as I said, transformative in many ways. So interesting to see how that continues to play out. Coming up, Bowdoin. We'll talk to the president there, understand how things are going as you rock out to the almonds.
I know, great song. Long list of questions to check in with the Bowdoin College president. All right, you're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So safe to say we are obsessed with talking about colleges and universities, how academia gets back to it come fall, because we know it's not an easy process, Jason.
I feel like at the end of this summer, we're going to need to put out like a compendium show of all these conversations.
Yeah.
Excited to have the president of Bowdoin College joining us next, along with Janet Lauren, one of our faves, one of our favorite collaborators here in the Bloomberg Empire. First, let's get back to Charlie Pellet. He's got an update on all the post-market headlines. Hey, Charlie.
Well, hello there, Jason Kelly. Got to begin with IBM. Shares higher now after hours, up by about 6%. It beat analyst estimates for revenue in the second quarter. Cloud sales offsetting coronavirus-fueled declines in its consulting services business. The Armonk, New York-based company reported total cloud revenue increased 30% to $6.3 billion in the second quarter. Again, IBM shares, they are pushing higher. Busy week for tech earnings. IBM up right now by about 6%. Stocks are now at the highest since February, with the stay-at-home trade thriving, even as investors get encouraging news on a potential virus vaccine. The dollar weakened to an almost 6-month low. S&P pushing higher today, now positive on the year, up today by 27 points, up 0.8%. The Dow ended the day little changed, higher by 8 points. NASDAQ at a record, up 263, up 2.5%. The 10-year up 4/30 seconds, the yield there 0.61%. Should point out that the NASDAQ 100 index also is at a record. Gold up 0.4%, $18.18 the ounce. And West Texas Intermediate crude oil today higher by 0.4%, now at $40.75. So again, stocks are at the highest since February. Optimism about a vaccine helping drive sentiment. David Pearl is co-chief investment officer at Epic Investment Partners.
So as long as we believe that one day we get out of this, and I do think we will have a vaccine next year, and the market looking ahead past that, you have a big opportunity to buy economically sensitive stocks.
Morgan Stanley says second quarter subscriber numbers at WW International, the company formerly known as Weight Watchers, may top consensus estimates. Morgan Stanley cites pandemic-induced weight gain. Weight Watchers shares WW up now by 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. Well, something Jason and I have talked a lot about, and that is how colleges and universities reopen in the fall. There is not one size fits all to doing this. At Bowdoin College, we recently talked about how it will not be participating in fall and winter varsity sports during the semester because it won't have all of the students on campus. So let's get into it and talk more about Bowdoin's plans for the fall. Bowdoin College President Clayton Rose joining us from where the college is based in Brunswick, Maine. And also with us is Bloomberg News higher education finance reporter Janet Lauren, who has been nonstop reporting on colleges and universities during the pandemic. She joins us on the phone in New York City. Welcome to both of you. President Rose, let's start with you. Tell us about making a decision for the fall, what was involved, and how you came to a decision.
Well, thank you, first of all, for having me on your show.
Yeah.
The two overarching goals that we were working on and that really drove us in the decision-making were, first and foremost, the health and safety of our students, faculty, staff, and the neighbors that we have in Brunswick. And then second, and very much connected to this, was delivering for our students, wherever they were going to be in the world, an excellent Bowdoin education in the fall. So those are the two North Stars that we anchored ourselves to. And the decisions that we took on the shape of the fall and how we were going to go about coming back in one form or another were really driven by those two things. We're returning to campus about 40% of our students. The first-year class, plus several groups of students around the first-year class. And then the rest of our students will be off campus. Virtually all of our classes will be done online, and that gets to the second piece, this excellent education piece that I talked about. We made an affirmative decision that the best way to deliver an excellent Bowdoin education was to have all of our faculty all the staff they work with, and frankly, all of our students focused on a single method of delivery, which was in an online version rather than doing some in person, some in some kind of a hybrid, and some online, but to have everybody focused in a single direction and to put all of our resources and attention on that single direction. And so far in the work that we've been doing, we're very optimistic about being able to deliver on that second goal while also protecting the health and safety of everyone.
So could you tell us a little bit about what being on campus is going to look like for, the 40%, mostly the freshmen? Lots of testing, lots of masks, not a lot of social interaction. Paint a picture for us.
Well, absolutely true, and it goes without saying that this year on our campus and every other campus will be very different from what has historically been a fall at college. And for first-year students, what they've been thinking about and getting geared up for several years now. Nonetheless, I think the experience for our first years and for the others on campus will be both important for them, and I'll come back to that in a second, and also fun and interesting and engaging in the age of COVID-19. First of all, we'll have a whole set of safety protocols, and you alluded to several of them. Face masks will be required in all indoor spaces, and then depending on the groups outdoors, there'll be self-monitoring, good hygiene practices, and social distancing. The classrooms we are going to use, and we'll have a handful of classes for the first-year students that will be taught in person, will be designed with safety in mind. Our dining has been completely re-engineered to allow us to, again, manage it in a safe way. All students on campus will have a single room, and there'll be a very low density of folks who will be sharing bathrooms with very particular hygiene and cleaning practices. So very different kind of sense of the place, but we'll be engaging in all kinds of ways to build community, to engage in activities, to have students do a number of the things that they normally do on campus, sometimes in lower density groups, and sometimes in different ways. We will, as you said, have a very rigorous testing regimen. We will be testing everybody on campus 2 times a week. And have a whole protocol established for that. We're working with the Broad Institute in Boston, which is in Cambridge, which has developed a fantastic testing program for colleges and universities in New England and in the lower part of New England.
Right. President Rose, just want to pause you 1 second. We're going to do some news and continue this conversation on the other side of that. So much more to talk to you about. I want to, in part, talk about, just given everything that's going on in the world, a course that you teach that caught our attention. So we're going to come back to that and continue our conversation with Clayton Rose, the president of Bowdoin College up in Maine. Also with us, Janet Lauren, higher ed finance reporter for Bloomberg. Carol.
All right, you're listening to Bloomberg Business Week. We want to take you back to some of the world and national news headlines that have been happening. A lot going on this Monday. For that, let's check in with Ed Baxter. He's in our San Francisco studio. Hey, Ed.
Yeah, hey, Carol. Hey, Jason. And hopefully this is not a rhetorical question. Has Donald Trump changed his tune on face masks? Well, he's tweeted that he is patriotic with a picture of him wearing a mask. And what it says, is, we are united in our effort to defeat the invisible China virus. And many people say that it is patriotic to wear a face mask when you can't socially distance. There is nobody more patriotic than me, your favorite president, end quote. He's also restarting the coronavirus task force briefings.
I think it's a great way to get information out to the public as to where we are with the vaccines, with the therapeutics, and generally speaking, where we are.
So maybe he has come around to what the scientists and governors like California, Gavin Newsom, have been saying.
We have to minimize our mixing. We have to minimize the transmission of this disease. We have to minimize that by practicing physical distancing, wearing the face coverings.
And Newsom says more vigilance than ever. California numbers are down today compared with the 7-day average. New York is in phase 4 without the indoor gatherings. Governor Andrew Cuomo says this time it has to be done right.
But if we learn from half of the mistakes we made in doing it,
we're the wiser for it.
He was talking about the first time, and he says the virus doesn't respect politics, it respects science. He says he will close outside bar activity if there continues to be blatant disregard for distancing. New Jersey opening for some amateur sports activities outdoors, and the Giants and Jets will be playing at MetLife without fans, TFN. Testing is a problem for cities like Miami, where people wait for up to a week to get results. Admiral Brent Greenwald, Assistant Secretary of Health, says progress is definitely being made in that arena. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. Well, back here on the East Coast, as well as the West Coast, I should say, big cities, well, it's not so fun to party in them anymore, Carol. I know that this is well known to you.
Yeah, exactly.
You know,
out to all hours.
All
yeah,
the clubbing that you're doing. It's actually interesting. I know I've said this to you a couple times off air. I'm watching the show Red Oaks.
Yeah, you told me about this. Yeah.
Our buddy Paul Reiser is on it, and it's set in the 80s. And one of the things they do talk about, or that especially as you get into season 2, there's a lot of these like young 20-somethings, college-age kids going back and forth to the city and like partying in the clubs and things like that. All that is on hold, to say the least, and that's one of the reasons that the kids who would normally be renting in the city, now they're renting in the burbs.
Right, exactly. So much for being an urbanite. Now they're becoming suburbanites. I mean, that's what's going on. And listen, this whole idea, the appeal of the city, again, a conversation I had over the weekend about folks who came from, another state, wanted to live close to the city.
They can make it there, they can make it anywhere.
A young couple wanted to tap into kind of Broadway and everything that's going on, and it isn't happening. And right now they're living in a high-rise and can't even leave their building, basically, and do anything
So why
safely.
not rent a house in the burbs?
Exactly. And so, but you think about the repercussions, Jason, in terms of the rental market, right? And, people who no longer have, operational businesses, so they're not able to pay their rent. And what does that mean to the real estate market? So, yeah, I mean, a lot of things are happening when the New York, LA lifestyle and nightlife goes away. There are implications.
And you're seeing annual rent declines in June. San Jose, 14%, San Francisco, 12%, LA, almost 10%, Boston, 6%, New York, just 2.5%. But, keep an eye on that, because if we continue to see this through the year, it'll be interesting to see whether that accelerates.
And we have another story that talks about Lower Fifth Avenue had the biggest drop in retail asking rents in the second quarter, sliding 30% from a year earlier. So it's happening.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. IBM beat after hours. Shares are pushing higher. IBM up now by about 5.8%. A day of records for both NASDAQ and the NASDAQ 100 index. Stocks now at the highest since February. The stay-at-home trade thriving, even as investors get encouraging news on a potential virus vaccine. S&P 500 index has turned positive for the year after its rally took it to levels last seen just as the pandemic was starting. Here's where we stand. S&P 500 index today did advance. We had the S&P 500 index up by just about 27 points, up 0.8%. Dow Jones Industrial Average up a little change there, while the NASDAQ Composite Index advanced today by 263 points. So again, recapping, it was an up day on Wall Street today. The Dow, the S&P, and NASDAQ all pushing higher. Again, the S&P 500 Index advancing by 27 points. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's continue our conversation about higher education, where we may be come fall is getting ever closer. With the president of Bowdoin College, Clayton Rose. He joins us on the phone from Brunswick, Maine. Also still with us, Janet Lauren, higher ed finance reporter for Bloomberg. She has been insanely busy trying to keep track of all these different plans because, as Carol said at the top of this conversation, it is not one size fits all. That's for sure, Janet.
So, President Rose, you had talked about doing testing twice a week. Can you give us a sense of how much that costs and what kind of a burden that adds to your budget for the year that you weren't expecting a year ago?
Well, the total cost of a health and safety program, of which testing is a significant part, but not the only part, is going to be considerable for Bowdoin and for every other school. The cost of the tests itself are about $30 per test. That's one of the things that the Broad Institute has been able to provide to colleges and universities. It's a very high-quality test, very accurate. The results should be returned to the individuals and to the school within about 24 hours. All kinds of positive attributes of the tests, and the cost is very reasonable in the grand scheme of things. We'll run about 35,000 tests over the course of the semester, so I haven't done the math on that, but you can do that and get to that number. But there are all kinds of other things that we're have in motion now that we'll need to do, and it will run into the several $1 million to be able to do that properly and appropriately for Bowdoin College. We're very fortunate, I should say, Janet, and you know this well, that we're financially quite strong. We have a large endowment, and we also have strong liquid financial reserves. So we're in a position where we're able to do what it is we need to do and make sure that we can take care of our community in the right way.
Right. The last measure we had of the endowment was $1.7 billion, making Bowdoin one of the wealthiest small liberal arts colleges. You were very early in announcing your plans. Does that come from being in such a strong and secure financial position, knowing that you could afford those tests and you could afford having such a strong place in the market that a student says, okay, we're not going to come next year? You have a very deep wait list. Can you talk a little bit about that position?
So we were one of the first schools, at least in the liberal arts universe and among the East Coast schools, to announce a plan. I would say, first of all, we were putting our plan in place without really considering the financial ramifications, right? As I said earlier, the two primary goals were health and safety and an excellent education. And when it comes to health and safety, you really need to do what you're going to do and then figure out how you're going to pay for it. And fortunately for us, we're in a position where we can pay for it and deal with it while it will be extraordinary for this year, will be something that we can manage. This decision to go first wasn't a decision that we made because we wanted to be first or there was anything sort of tactical in all of that. We've been doing a considerable amount of work since March, late March, when all of this broke, to understand what our options were going to be and what the issues were going to be and how we were going to think about the fall. and had come to a conclusion about what we were going to do. And this was with committees of faculty and student staff, advice from lots of outside experts. I spent a considerable amount on the phone with folks from public health and science and medicine and the government, a lot of work with our board, input from parents and so forth, and we were ready to go. And there was a lot to do to let our students know so they could start thinking about what they needed to do, and to get our faculty going on how they were going to recraft their classes for the fall. And so we went when we were ready.
So, President Rose, we don't have enough time for you to answer this next question, but I'm going to ask it anyway. I'm fascinated by your background. You spent 25 years in finance, and notably, you have a doctorate from Penn, I believe, you studied issues of race in America. You teach a course called The Moral Leader. I wonder, as you come into this school year dealing with the sort of dueling crises that we have in this country, what's going to be your message to the students, especially given that these are issues you've studied so intently?
Well, unfortunately, I won't be in the classroom this fall, but I have taught as a first-year seminar to our students, The Moral Leader, which is a course I taught when I was at another institution before arriving at Bowdoin a number of years ago. And as you said, we're in a situation nationally and globally with these crises, the pandemic of the COVID virus and the pandemic of racism that are extraordinary, historic. We are working incredibly hard from a scientific perspective and a cultural perspective to get after the disease, and I am hopeful, and I see hopeful signs that we as a society are going to be getting after the pandemic of racism. It has been way too long and not having turned to some of the serious work that we need to do. My message to our students is, and to all of those in our community, is that we are all in this together. It starts with me. I need to rethink my own personal commitment to this. I've shared my thoughts with the community in some writing that I've done to them. And we need to think about what it is we're doing and how we're doing it at the college that exacerbates the inequalities that come with race. And then for each of us to think seriously and individually about how it is we exacerbate those problems as well. We have a great community. We have a great history of dealing proactively with these challenges and challenges like that. And I'm confident, actually, that our students in particular will be a big part of the solution here for us.
In just about 30 seconds here, do you feel like something's different this time around?
It does feel like something's different, Carol. I can't quite put our finger on it, but one of the touch points of that has been the observation I've heard from our African-American staff and alumni that and faculty, that when we are all at some of these protests and engaged in this work out in public, for the first time you really see large contingents of white allies involved in this. And that is at least a hopeful sign. We have to continue that. We have to carry that out. This is long, persistent work that has to be done.
Agreed, right. and appreciate your optimism about that, because we certainly could all use some of it. But Bowdoin College President Clayton Rose, thank you so much. Really appreciate your time joining us on the phone from Brunswick, Maine, along with our Bloomberg News higher education finance reporter, Janet Lauren. We've been following, Janet's reporting has been just unbelievable.
Spectacular.
In terms of tracking how schools are coming back and, everyone doing, their own thing and kind of finding their way. It's not an easy decision, and some schools are in better positions than others, and we're certainly seeing that come out. But great to hear what he had to say about so much that's going on in our world.
We'll want to check in with him in the fall for sure. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on 99.1 in D.C., Sound On, that is coming up next. Coming up next, we're going to talk a little hydrogen.
We are.
A little bit about...
That's what we're waiting for.
Yeah, exactly. You brought this up recently. I'm interested to see where you take this conversation. Also a little bit about leadership, changing the way you think. This is Bloomberg.